interest rates. Just to give a little backdrop, if we look at the beginning of last year, interest rates were hovering anywhere between 6.75% to 7.25% until we hit June, July, when interest rates started drifting down. Hey, you were in the fives. What do you see?
The war is driving everything right now because inflation is underpinning all of this. In fact, I thought it was interesting that we saw April's inflation numbers that came out a couple weeks ago. The consumer price index was up 3.8% year over year. But when you take the core CPIs, when you strip out energy and housing costs, it was still 2.8% year over year, right? Which is still pretty high. And I think that kind of goes to show you that inflation has kind of hit the broader economy, but a lot of that really still has to do with, fuel prices, because look, goods have to get somewhere somehow.
Welcome to the Real Estate Show with Pat Lopez, where we talk everything real estate. Today, my guest is Tom Lynch from Philadelphia Mortgage Company and the president of the Mortgage Banker Association, Eastern Pennsylvania. Welcome to the show, Tom.
That's right. Thanks, Pat. Appreciate it. Thanks for having me on, man.
Okay, so what we're going to talk about for today's show, because you're a mortgage guy, right?
Yeah.
Perfect. We're going to talk about interest rates. We're also going to talk about where is the mortgage industry heading? Is it going to get into some craziness like the real estate side of things? And of course, what is the Mortgage Banker Association? When did it start? What's the mission and all that? Yep. But before we get into all those topics, I generally ask, how did you get started in lending? Tell me your story.
Some might say I was destined to be in this business, and why I say that is my dad was in the mortgage business. He had a mortgage company for a number of years, owned a mortgage company. My grandfather, my dad's dad, actually worked for Fannie Mae many years ago. So it was kind of in my blood. In fact, when I was a kid, we used to, my brother and I, my dad, I guess, used us as cheap labor. My three older sisters, they kind of got away with it, but my brother and I would be in filing papers on weekends back when we used to file papers. And I knew the difference between an FHA, a VA, and a conventional loan by the time I was probably 11 years old. So fast forward many years later, I was actually started on the title side of the business, did that for a few years, and decided to get onto the mortgage side, the origination side, just in time for the financial crisis. So
perfect time, right?
That was a fun time to get in. But honestly, I feel like the timing was good because I didn't know any different. I didn't know any better. And I think, if you had kind of been doing it for a while, you're kind of set in your ways, and you could probably speak to this too, is that, when there were some significant changes after 2008, it became a bit of a different business,
right?
So you kind of had to retool some things to adapt. So I'm kind of glad I got in at a crazy time, but been doing it ever since.
Okay. Now, your journey as far as the Mortgage Bankers Association, what is that, first of all? We call it MBA, not NBA, M as in Mary BA, right? How did you get involved with that?
So again, it's something that I've kind of been around for forever. The Mortgage Bankers Association used to be the Mortgage Bankers Association of Greater Philadelphia. We changed the name several years ago because there used to be some more chapters throughout the state, but they've kind of consolidated. So we wanted it to kind of so people would understand that we covered a larger territory than just the greater Philadelphia area. So my dad, again, he was a past president of the Mortgage Bankers Association Greater Philadelphia. So it was something that he just instilled in me from an early age, that doing your part, advocacy, being a part, doing things for the greater good of the industry was something that was important and instilled in me since an early age. So I kind of naturally flowed into it, and I guess maybe about 15 years ago, really started to take a little bit more of an active interest. Been on the board for a number of years. I was vice president for a number of years, and been president the last couple of years.
Okay, and then how long is the president term?
Well, that's a little bit in flux right now. So basically, it's until either I don't want to do it anymore or until they don't want me to do it anymore. So the previous person in was there for several several years, so I figure I got at least another year or so in me, but we'll see how that goes.
Okay. And now, what are some of the things that you do? We're going to talk about a big event coming up on the 16th of June.
Yeah.
But what are some of the events? Why would somebody, if I'm a loan officer, why would I want to join? Or if I'm a lender, why would I want to join?
Yeah, so really what we, and this has kind of been the mission since 1939 is when the organization was started as the MBA of Greater Philadelphia. And, our mission, we kind of have these three pillars, right? And it's networking, education, and advocacy, right? And advocacy kind of being one of the biggest pieces of it, but certainly the networking, the education piece are what we try to do. So all of our events, we have some educational events, we do webinars, educational webinars, we have just some plain old fun networking events, and certainly we have some advocacy events. In fact, just a couple weeks ago, we were in Harrisburg. A group of us were in Harrisburg meeting with elected representatives. Our regulators, we met with Wendy Spiker, who's the Secretary of Department of Banking and Securities, Robin Weissman, CEO at PHFA. So we kind of made our rounds there, and we certainly also participate in the National Mortgage Bankers Association events. We were down there for their National Advocacy Conference in April. But we try to have as many events as we can. The in-person events, it gets a little bit harder. Everybody's lives are busy, I get it, but we still try to have those, and like you said, we have a big one coming up on June 16th.
Okay, to talk about that, because for full disclosure, I will be there. We're an actual sponsor. Queen Oak Mortgage is a sponsor of the event. We have a little table there, so be sure to swing by and say hello. But what is that event for, and what are you trying to accomplish at that?
Yeah, so we kind of started this. This will be our fourth year doing it, and several years back, a couple of us had met. We were actually trying to come up with an idea for just a fun social event, warm weather event for our members. Just kind of maybe a happy hour of some sort. A new hotel had opened up in Conshohocken, Hotel Westin Maine, which is where we've hosted this the last 4 years, and we wanted to make it a little bit bigger. We realized that the scale of this, they have this great, beautiful outdoor courtyard. We wanted the scale to be a little bit bigger, and we kind of came up with the idea: if you build it, they will come. If you put realtors in a room, LOs come.
100% correct.
If you put LOs in a room, vendors come, right? And if you have realtors and loan officers in a room, the title folks come. So we came up with this idea to maybe make like a little mini, triple play. Anybody who's been to triple play in Atlantic City, but just the party aspect of it, which is what most people go to triple play for, I'm pretty sure.
That is true.
So we started this Trifecta event, as we call it. So, mortgage, realtors, and title. But it is an outdoor, fun, social networking event. There's an open bar. There's great food. We have a live band. But a bunch of the guys that are in the industry, they call themselves the Lone Rangers, Loan, Lone Rangers. So they'll be there playing live. We've had some great weather last couple years, had a lot of fun, but that's really what it's for. It's for everybody to get together, and it's really become one of the most anticipated housing social events on the calendar.
Okay, and rumor has it, if you are a realtor, it's free to attend?
That's right.
Is that
That's
free?
right.
Realtor? Free? I'm just throwing it out there.
I always say it's a realtor's favorite four-letter F word, right? Free. So yes, you do have to pre-register. So please pre-register, but it is free for realtors. And then we have a member price and a non-member price. So anybody can come. We'd like you to become a member of the MBA of Eastern Pennsylvania. You get a reduced rate. But if you're not, you can certainly still come. You can buy tickets. You can go to our website, mbaepa.com, check out our events calendar, and you'll be able to link to the registration from there.
Okay, and we're going to post that up as well, so be sure to check that out. Okay, great. Are you thinking about buying, refinancing, or investing in real estate? I've been a loan officer for 30 years, helping my clients find the right loan for the right property. I keep it simple and honest. If you want real numbers and guidance you can trust, give me a call. Now let's get back to the show. Now, one last question about the MBA.
Yeah.
Is there any one thing you're really advocating for? Like, is there anything up on the horizon that we, should know about?
Yeah, so there's a couple. I think people don't realize how many bills get not only passed, but how many bills get written and proposed in Harrisburg every year. I mean, it's a crazy amount, and how many of them actually could affect our industry. So there are a number of bills that we're keeping our eye on. Luckily, anything that we feel would be super detrimental doesn't seem to have a ton of legs at the moment. Some of these bills have actually passed the House, but have stalled in committee in the Senate. So we're certainly keeping an eye on those. There's a lot of talk in Harrisburg around home equity investments, or these home equity agreements. About are they mortgages? Are they not mortgages? Should these people be regulated? Shouldn't they be? So there's a lot of opinions going around about that. So that's something to kind of keep an eye on. But the big thing that we've seen happen in other states that we really need to be cognizant of is CRA for IMBs. So some states now.
Well, what's CRA?
So Community Reinvestment Act, and for banks who have FDIC insurance, who can borrow money at cheap rates, it makes sense. There's some benefit that the banks are getting. They're community-based banks. Yes, we feel like there should be some giving back to the community through this Community Reinvestment Act. I think it makes sense, at a bank level, but for IMBs, for independent mortgage bankers who don't have banks, who don't have deposits, it really doesn't make a lot of sense. And I'm not going to go into all the details and nuances about it, but it's something we need to keep an eye on, because other states it has passed, and it will be an issue. And if we see some things change with with the next election, it certainly could come up. We've been told it will come up if certain things happen during the election. So that's something we really have to keep an eye on,
right?
Because that's something we will really have to.
And I can imagine the big banks are advocating for that all day long, because that'll have pressure for the independents, that they don't have the deep pockets and less competition, like anything else. The big get bigger and the small, go away.
Yeah.
Okay, so yeah, that ultimately does make sense. And just to give some texture to it, it would be, hey, you could do a 3% down with no mortgage insurance if you're in a certain census tract, that kind of thing, or you have to lend a certain percentage to underserved markets, things of that nature is what they look at, right?
Well, exactly. And what we always try to point out is that certainly the banks do a great job at it too, but the IMBs, the independent mortgage bankers, they're already serving these markets. When you look at the percentages of FHA loans, low to moderate income, minority lending, the vast majority of it is still happening at the IMB level. So they are kind of already serving that purpose. But again, politicians, a lot of times they want their name on something. They want to be able to stand up with something big and loud and hold it up. So hopefully we can continue to educate our elected officials, on where it makes sense and where it doesn't make sense.
Okay, great. Okay, so let's jump into interest rates.
Yeah.
Just to give a little backdrop, if we look at the beginning of last year, interest rates were hovering anywhere between 6.75% to 7.25%, until we hit June, July, when interest rates started drifting down, and they drifted down until Iran, right? Where are you seeing interest rates? Because we started out the year, which really thought we were going to have a gangbuster year, that interest rates were in the fives, especially depending on what loan program you are. If you had FHA, VA, they were definitely in the fives, depending on credit scores, primary, single family versus, like other criterions. But hey, you were in the fives, where, January was super busy when people were like, oh my God, what are you seeing? We talked Well,
Yeah. So, and you kind of hit the nail right on the head. It's, Iran, right? The war is driving everything right now because, really, inflation is underpinning all of this, and the war is just driving inflation up, right? So energy costs and really energy costs, fuel costs. I mean, that trickles down to almost
driver for everything. Yeah.
in fact, I thought it was interesting that we saw April's inflation numbers that came out a couple weeks ago. CPI year over year, the consumer price index was up 3.8% year over year, highest reading I think since 2023. But when you take the core CPI, so when you strip out energy and housing costs, it was still 2.8% year over year, right? Which is still pretty high. And I think that kind of goes to show you that inflation has kind of hit the broader economy, but a lot of that really still has to do with fuel prices because look, goods have to get somewhere somehow. So I think that we first need to, as far as rates are concerned, we first need the war to end.
Right.
That's step one. But it's not like I don't want people to think that overnight rates are just going to drop.
Right. That's the question I was going to ask you. Yeah.
So we'll see a little dip, right? We'll see that immediate kind of knee-jerk reaction, but inflation is going to persist for some time. It's going to be, they use the term sticky and things like that. So that's our biggest issue right now, and I think rates are probably going to remain, elevated for the foreseeable future.
Right. So yeah. So what they're saying is, hey, the war stops. It'll take time for oil to get to where it needs to get. It's just not like, hey, you turn on the spigot and that's it. That's going to take time. So gradually, you'll have an instant impact, but then gradually rates could potentially go down. But you're absolutely right. Inflation is still an issue, 100%.
Yep. Yeah. And look, rates, I am confident in saying rates will go down. I just don't know when or by how much.
Right.
And I'm not going to, there are guys a lot smarter than me, these economic forecasters they're like weather people, right? They're still wrong most of the time because, they're trying to predict the future, right? Based on past trends. So it's a really difficult job. I don't envy those economic forecasters. So I won't give any forecasts other than to say that rates will come down at some point. I just don't know when or how much.
Okay. And now we have a new governor, Kevin Walsh, who is running the Fed.
Yeah.
What kind of impact do you think he will have, if any, in the immediate and in, I think, long term maybe more, but immediately? What do you see as far as that?
Yeah, so I think it's going to be really interesting to see what happens and what Kevin Walsh does, in the coming days, weeks, months, and heck, even years, right? Walsh is kind of a known inflation hawk, so I know that's top of mind for him. He's also come out very publicly, even in his confirmation hearing last week, to say that he wants to reduce the Fed's balance sheet. And, sometimes lowering rates and reducing balance sheet, I mean, that's a little counterintuitive. And again, I'm not an economist here, but, if they're going to be rolling off some of these assets, obviously they need to be careful not to flood the market and impact pricing. I think one of the things that they can and will probably do is reduce the bank capital requirements, which those funds are kind of parked on the Fed's balance sheet, so they can kind of roll some of those assets off, reduce the balance sheet that way, freeing up a little more capital at the banks as well, which I think would be helpful. But the Fed still holds, I think it's around 2 trillion MBS, mortgage-backed securities bonds. So to get those off their books, I mean that's going to have to be very, very slow and gradual.
Right.
So I'll be interested to see how Walsh deals with inflation while reducing the Fed's balance sheet and trying to lower rates. I'm not sure that all of those things can happen.
Right.
At least not anytime really soon.
Right.
So I don't know where he'll focus first and foremost.
Right. And then what you have is the target is 2%.
Yeah.
I guess somebody from like Iceland or Netherlands or whatever came up with that number, who knows? Anyway, but we're not at that 2%, and like you said, not close. We're pretty much in the threes when it comes to that. So yeah, it's going to be super interesting how that all works. And like I always say, only time is going to tell as far as that's concerned. Now, the good news is the reason why rates are still in the sixes, high sixes, mid to high sixes, but still in the sixes is because of the spread. And if people don't know, that mortgage spread is the difference between the 10-year treasury and where the mortgage-backed securities is selling. And if we turn around and we look in 2023, that spread was like 3%. Now we're at like around 2%. So interest rates could be hit in the high sevens right now if it wasn't for that spread getting much better. So thank God for the spread as far as that. And that's another thing where interest rates can only go so high because that spread is keeping that down. But like it's, who knows?
And look, at the end of the day, it's all supply and demand, right? I mean, obviously, you can't completely crush demand. There's going to be some appetite at some point for these mortgage-backed securities bonds. So I don't think rates will go sky high. I mean, I know there's some folks, some pundits out there, that are claiming they will and we'll continue to see them rise. But I think we'll be able to kind of dampen that a little bit.
Perfect. Okay, let's jump into the mortgage industry as a whole. It just seems like every day, headline after headline on the real estate side, who's buying who, XP buying this one, Real buying Remax, Compass buying Anywhere, Rocket buying, Redfin, you name it. There's a lot of stuff, happening. But what's happening on the mortgage side? I don't see as much noise.
No, I mean, I don't either. I mean, I think with anything, we will see some consolidation. As I'm sure you're aware, there's, been some compression, margin compression. There's a lot of lenders who are struggling. There's a lot of lenders out there who aren't making money or aren't making enough money to sustain the business. So I think we will slowly but surely see some more consolidation. You will see some mergers. You will see some of these, smaller, mid-sized lenders, being bought or being acquired by some larger lenders. So I think we will see that. And look, that's natural, right? That's just going to happen at any time. But I definitely think there's a lot of folks out there that are feeling that margin compression, and I do think we'll see a little bit more consolidation going forward. But I don't think to the degree that we've seen it on the real estate side.
Yeah, because I think eventually you'll probably have about 5 big giant real estate companies controlling 60 to 70% of the market, and then the mom and pops will have the 30 to 40%. Right. So who knows as far as that's concerned. Now, as far as Rocket and Zillow.
Yeah.
Rocket's a mortgage company, big giant mortgage company. Zillow's trying to get into the mortgage game, and they're trying through their acquisitions, trying to get more of that market space as far as that or percentage of it. Like, do you see some, there's already lawsuits out there because, they're trying to strong arm or saying, hey, we'll give these incentives and all that kind of stuff. Do you think that will be anything, or there'll be more of that? Because I know there's, what is the what is it? FCP? What is the acronym for the mortgage? CFPB?
Oh yeah,
right.
Yeah.
Like they cut out some of the legs on that, so there's that's not as much. So what do you think is going to happen? With some of that, some of these lines are being blurred a little bit.
Yeah, and one thing I know will continue are that we will see more lawsuits. The lawsuits will continue. The attorneys always make out at the end of the day, but yeah, I do. I think we'll see some more of it, and I think it'll be really interesting how the courts start to interpret some of this. And I think we will start to see, I think it'll be kind of all over the place in the beginning, but I do think we will start to see some some decisions, fall in line, because I think these will keep moving to higher and higher courts. And I think we'll get some, but I think it's going to be a while. I think we'll get some clarity, but I think it's going to be a while.
Okay, and last question I have. Rocket just made an announcement that they're going to start, utilizing the Vantage score.
Yeah.
I'm really not seeing that on my level. What are you seeing as far as that? Do you think that will be like, the camel's nose under the tent type of thing, where more people will start using that? And then what is the Vantage score? What am I even talking about?
Yeah. So, and actually, I'm really glad you brought that up, because I've kind of really in the last couple days, I've had some real world experience with this. So, Vantage Score was created by the three bureaus, kind of as an alternative to FICO, Fair Isaac, who has been, the Goliath.
Monopoly for 30 years.
Exactly, forever. And, they kind of had this stranglehold on the industry, where the three bureaus, had to pay licensing fees to FICO to use their scoring model, their various scoring models, which I always remind people.
Right.
They're like, my credit score. I was like, there's not one credit score.
Right.
There's so many different scoring models out there, which I'm not sure makes sense. But anyway, so Vantage Score was kind of created by the three bureaus, I think, to kind of say, of course, their line is, we're just trying to create some competition. I think, they were saying, hey, we've been paying these licensing fees forever. Can't we come up with something on our own? So that's out there now. And, FHFA, FHA have kind of said, hey, we're going to allow this. And there's some lenders that are rolling it out, kind of on a pilot basis. Rocket happens to be one of them. Now being on the broker side, I myself personally just had a deal this week that their FICO scores came back a little low.
Right.
It was, I don't mind saying it was a 578, which anybody in the business, knows it's going to be a little tough.
Right.
Under 580 gets really pretty tough, no matter who you're working with. And I ran it through, and what Rocket and many other lenders are doing right now is kind of running them simultaneously, and comparing the scores. And I had so it was a 578. It went to a 632 on Vantage Score.
Big difference.
Totally changes now what loan programs they have available to them. So I think it's going to, as it becomes adopted, which we know it's going to take some time. Yeah, because the technology, the regulation around it has got to catch up. But I do think that it's am I going to call it a game changer? I don't. People throw that term around a lot, but it is going to make a difference, and I think a relatively big difference.
Right. I agree. Because even if it changes 10%, 10%, because now you have two models. And with the Vantage score, what they're supposed to do is they're supposed to look at some factors that maybe the FICO score doesn't, like renting. Have you been renting for a while? Paying utilities and so on and so forth. Now, the only thing I don't understand, and nobody's really explained it to me, how are you going to know if you're paying your rent on time unless you do like an Experian Boost type of thing where you go on there and you're reporting your rental payments. Yeah. But like, how would they know that? But like anything else, I guess, technology will get a little bit more sophisticated on there. But hey, if I've been renting for 10 years, never missed a payment, that should be an indicator, am I going to pay a mortgage? Which makes perfect sense to me.
Yeah, and there are companies out there, and I think we're going to certainly see more of them, but I know of one in particular that they will verify your rental income and report it to the bureaus, and it will show up, as part of your Vantage score. So I think we're going to see more of these companies doing
smart.
it.
Yep.
And I think also you're going to have these, I think you'll have these landlords, especially the larger ones that maybe have some deeper pockets and some bigger technology. I think that will be part of it. And maybe they'll say, hey, listen, you can sign you sign a lease with us for $20 more a month. I don't know. I'm not making this up. Maybe I'm coming up with a business idea right here, Pat. But for $20 more a month, we will report, your rental history to the credit bureau. So at the end of the year, your credit score can be boosted. I think there's some opportunity, and I think obviously there's a lot of smart people out there that will, put together an idea to be able to get rent reported to the bureaus, because it's a huge piece that was missing.
Right. Okay, perfect. Okay, so we're going to pretty much end this because we could be sitting here talking for like 3 or 4 hours. I can ask you a million questions. But Trifecta, June 16th, right? And we're going to post the website for that, so you can register. Once again, realtors, it's free. More realtors out there, you can say hello to me. And if somebody wanted to get a hold of you, find out more about the MBA, or just find out more about your services as a loan officer, how do they get a hold of you?
Yeah, well, I mean, you can hey, find me on LinkedIn. I'm on the sales side of things, so my cell phone number, my email are out there, but certainly call me. Check me out on LinkedIn. Check out mbaepa.com. Tom at tlynchmortgage.com. That's my email. You can always contact me there. But definitely come on out. June 16th, Trifecta. I forgot to mention we got one of those 360 video booths, photo booth, open bar again, free for realtors. But come on out, check it out. It's always a huge event. We'll have several hundred people there. So hope to see you there.
Okay. Well, Tom, thanks again.
Yeah. Thank you, Pat.
Very, very good. Okay, that's the Real Estate Show with Pat Lopez, where we talk everything real estate. Remember, follow the show on Facebook and Instagram. And of course, this will be airing on YouTube, The Real Estate Show with Pat Lopez. We talk everything real estate. Hope you enjoyed the show, and I'll see you next week.